Okay, let's go ahead and post transactions for the month of October. We're going to use a method similar to the one that we used for September. We're going to book of statement, but what we'll do is we will book of statement while we're in reconciliation mode. So it's your crunch mode, right? We're going to enter reconciliation mode and we're going to book while there. It's a cool feature that QuickBooks has, and we're going to use it to our benefit. So we're going to start with our credit card statement. Okay, here it is, ending balance. Good, let's enter our finance charge. We're just going to do it in the... Alright, so let's show how this one works in terms of debits and credits, right? So $36 finance charge is added to our balance on the credit card, so liability goes up. What else is happening? Expense goes up, right? So here it is. Even though we're entering it once, it is still part of the double entry accounting, right? So this 36 becomes a debit for account 61,700, and it is a credit for 21,100. Liability goes up when credited, expense goes up when debited, right? So we're good to go on that one. All right, so we have our $36 right here. I'm gonna click it. What else we got? Well, we got some payments and some transactions, and we're gonna book it using general journal entries, right? So this way we don't need to use our debit credit window because debits and credits are right here, and we'll know what's going up and what's going down. So first we have the payment. Let's see if we have receipt for that one. Here it is. So let's book it. Okay, make sure we have the correct date. Okay, so what's happening? We know we're paying out of our bank account, right? So here's our bank account. It is reduced through credits. All right, what else is happening? Well, our liability, our credit card liability is going down as well because we're paying it down, right? We take money from our bank, we pay it to our credit card, liability is reduced, liabilities are reduced through debits, right? And the bank account is an asset, money is leaving that account, and therefore it's reduced through credits. So here we are. All right, see it's showing up now. Let's take a look at our statement. Here it is. Cool. All right, so now we just got to book the transactions, right? Same method. Okay, let's start with gas station receipt. All right, do we have one? Here it is. All right. Good. So what's happening here? Liability goes up, right? Because we're paying by borrowing. We're not spending our money, we're borrowing, right? We're increasing our debt. So here it is. An expense account for fuel goes up as well, right? Because we're spending money on fuel, so it's being debited, and therefore it goes up. And since we're paying for it with debt, our liability goes up and we're crediting it. Okay? What else we have here? We have our soft drinks. So here we are. Let's take a look if we have that one. Here it is. Good. All right, same thing, right? We're paying with a credit card. Therefore, debt goes up. And debt / liability goes up when credited. What else is happening? Well, our drink purchases expense goes up, and expenses go up when debited. All right, what else? We have a food traders transaction. Let's take a look at that one. Here it is. Good, again, same thing, right? Because we're booking for credit card. So here it is. Credit card is a liability. Liability is increased when credited. What else is happening, right? We're buying food purchase. Here it is. Expense goes up when debited. Save and new. All right, next one is our cell phone. All right, that's good. Do we have the receipt for that one? Here it is, right? So let's enter it. All right, again, we're paying with a credit card, so the debt goes up. And our telephone expense goes up as well, right? It's debited and that is credited. All right, so save and new. What else do we have? We have the to-go packs on 1017. Do we have that one? Here it is. All right. Again, we are paying for it by borrowing. Therefore, our liability, our debt is increased. And we're spending money on restaurant supplies. It's an expense, so account 6100 goes up. We're debiting it. That expense is going up. And what else we got? And we also have a receipt from gas station on 1025. So let's take a look if we have that receipt. Here it is, right? So let's book it. All right, same thing, right? We borrowed against the credit card. So liability goes up. And we spend money on fuel. So here it is, fuel expense goes up, right? So we are good. Save and close. You see now we're back into our reconciliation and all those transactions are posted. So let's go back to the statement and see if we can get to 0 on our reconciliation, right? That's our objective. And we are at 0, right? That's the objective we want to achieve, and we achieved it. So reconcile now, cancel out of this one. All right, let's take a look at the reports. Balance matches, good. We can print it, attach it to the statement. All right, payments matches. Let's take a look at transaction. All is here. Again, we'll print it, attach it to the statement, and that concludes reconciliation of our credit card statement.